I just turned it on, so let's see if it comes on.
Okay.
Talk to you later.
All right. Talk to you later. I'm hanging up.
Alrighty, getting ready to go. Don't. And there we are. Yay! Hey everybody, we're getting ready to get started. Nobody's watching yet, which is kind of okay. Let me see if that is right. One. Yeah, it does look like the right one, doesn't it? Okay. No, that's not right. Let's sign in to my Thinkorswim. Yep, signing in to Thinkorswim. Hit that button there. We should be good to go. Yep. And we're just getting ready to get started. I am live. Yay! Okay, so now we're gonna log on to Thinkorswim once this thing uploads and gets ready to go. I did have it set up, but you know the funny thing about getting set up beforehand, you never know when Microsoft is going to do an update. So here I am trying to get ready, trying to get started, and I come up with an update and everything is gone. I hate when that happens. There we go. She should be on any second now. And we're at 9 o'clock exactly. Hey everyone, this is James coming to you from the 10-Minute Trader. We are going to go over our recommendations from last week, because we recommended a few things last week, and I wanted to show you how it went out. Okay, so here's our software coming up, and we got the software up and running. Oh, and there's our Thinkorswim trading account. So let's bring this down for a second so we can go over. All right, we're at 9 o'clock on the nose. Today is the 13th of December 2016. It's 9:01 p.m. Now, first thing we're going to do is we're going to look at some of the stocks that today was the EX date, which means you would had to have gotten them yesterday in order to be qualified to get the dividend check in a couple of days. So let's see what's what. Okay, Tuesday, December 13th, 8 companies. Now these 8 companies are, if you come up here, you can set your parameters. So you can clear your filter, all this. I like to hit this one right here. Comes down to NASDAQ, the Russell, the S&P, the Russell Mid Caps, the S&P Sector Indices, blah, 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 Tasty Trades, blah, 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 Thinkorswim Challenge, blah, blah, blah. I like to use the weeklies. That tells me which companies are paying a dividend and they're going EX today and have weekly options. Now I'm going to show you in a little while why I like the weekly options. But for now, let's look at these 8 companies. DVM we're going to skip over because it's only a 6-cent dividend. I told you guys before I don't like taking anything less than 10 cents. GG is only 2 cents. We're not going to pay attention to that one. So GILD is the first one we're going to take a look at. We're going to put it over here. GILD. Now, I'm going to tell you right from the start, I probably wouldn't do this trade because this is what you call a downtrend. Okay? It may or may not hit good everything else, but in a downtrend like this all year long, I've been doing nothing but going down, shoot up, down, little profits, blah, blah, blah. But it's trending downward. So I personally wouldn't do it. So if you wanted to do it, we're looking at today being the 13th. So when would we have gotten the signal on this one? 10 days ago, we would have gotten Monday on the 28th to jump in first thing Tuesday morning on the 29th. Okay, so everything I'm going to show you right now, we're going to look at the opening price on the 29th of November because that's when we would have gotten the signal. Okay, because I send out the tips in the email 2 weeks prior to the dividend date. So if the dividend date was today, you would have gotten this tip 2 weeks ago. So let's see what it done on the 29th. 29th is right there, and we're looking for a 47-cent move. Had you done it, and I told you I would not have done it because it was in a downward trend, but you may be unlike me and you may have wanted to go for it. So the opening price on the 29th, see, look over here, this is the open, here's the high, here's the low, and there's the close. Okay, the date and the stock symbol and where it's traded. It's traded on NASDAQ. So here we go. On the 29th, see the dates down here. Stock prices are over here on the right. Okay, this was 11.29. Okay, so the opening was 74.69. The high for the day was 75.40. So what is 47 cents on top of 74.69? Add it up. So let's add in our heads. Or we just pull up the calculator. My rusty trusty calculator. Okay, 47 cents, and we're looking at 74.69. 74.69, and we got 47 cents to that. Our new target is 75.16. Okay, so if the opening of the day was 74.69, 47 cents on top of that, 75.16. The high of the day was 75.40. So yeah, you have been called out the very same day, which, hey, I like that. Didn't get called out the first day, you would have been called out way over here. But that's a good thing. Okay, that was GILD. Now LDOS, LDOS, it's only 32 cents. LDOS, looking at 32 cents from the 29th. Okay, here's the 29th. Do we even have to look at it? Probably not. The opening was 50.39. The high of the day was 51.67. So it definitely made the move the very first day. And if you had a trailing stop, you would have probably been called out somewhere, I don't know, 51.5, 52 maybe. Who knows? But definitely would have made it on the first day. Now that was LDOS, and I'm looking at M, 37 cents for M. M. The 29th, where's the 29th? 29th is right. It's 25th, 6th, 7th, 8th. 29th. There we go. Okay, so the 29th. We have the opening of 43.27. Remember, the numbers are right up here. Okay? The date, opening, high, low, close. Okay, so we'll come over here. And you see how the date changes every time we move? Okay, so right here is 11.29. The opening was 43.27. And we're looking for 37 cents. And we're looking at 47 cents. And our new target is going to be 43.74. The high of the day was 43.61. It didn't make it. So does it actually ever hit 27? Yep, hits it right there. So that would be day 1, 2, 3, 4, 5, 6, 7, 8. 8 days, and you would hit that one. All right, that was M. How about MRK? Let's take a quick look at MRK. MRK. MRK looks at a 47-cent dividend. 29th. Okay, a 47-cent dividend from MRK. Whoops. The opening was 61.95, and the high of the day was 42.46. So it definitely did make the 47 cents in the very same day. You would have been out of that one also. TCK. TCK, we're looking at three. We're not even going to do that one. VIAB. We're not doing TCK because it's only a 3-cent dividend. We don't even bother with those. Okay, the 29th. Right there. 28th. Here's the 29th. 29th. There we go. Okay, the opening was 36.73, so it would be 36.93 would be the dividend. Would be the new target price we're looking at, and it definitely made that at a 37.18. Now, you guys got to remind me that I have to make a video showing you how to use a trailing stop or a stop loss, because a trailing stop allows you to get a little bit more extra profit, keep you in the trade a little bit longer. Because see, if you use a trailing stop here, you may have gotten out the first day, and just take the 20 cents, or open at 36.73. That's a whole dollar move on the second day. Because it went to 36.75. Wow, $1 in 2 days. Not bad. I can do that. It's better than 20 cents. That's 5 times as much. All right. So as you can see, everyone that has a weekly option that's on the list for today actually made it on the first day. There was one of them made it on the 8th day. But that's not bad, holding 8 days and you still make the profit. It's still all of them made it. Now, we didn't look at TCK because the dividend wasn't big enough. GG, dividend wasn't big enough. DVN, dividend wasn't big enough. Other than that, all the other ones actually made it. So there's 5 of them that made it, 3 of them we didn't even bother with. Now, tomorrow, it's these 3 right here having the option plays. Having the weekly options. Okay, so that being said, let's jump over and see what we're looking at for this week. Here we go. So this is the list you would have gotten on Monday. Okay? And these are all the companies you would have gotten. These are for the dividend capturing, for those who just want to jump in, grab the dividend, and get out. All of these. And believe me, there was over 80 of them that have an 80% chance or better. So let's look at a few of them. AKR, ELS, MKC, LPT, DEI. I don't even know who these guys are. But anyway, that's those. Here you go, AFSI, ITW, OFS, OFC, DE, John Deere. We know John Deere. Take a quick look at John Deere. John Deere has got nice numbers. Look at that, ones. You got. Now this makes me a little concerned here. The close for the day, that was last Friday, because I do this report on Sunday, so it get to you on Monday. It closed at 103.92. Okay, and the high for the year was 104.83. The dividend is 60 cents. There's still a chance it could move up. But look what they have for the 1 year target, only 99. Why would I want to buy a stock that's going to have a 4% decrease over the next year? Even though they are paying a 2.34% dividend, let's take a look at John Deere, see if we can get in and get out. I want to show you a few little nifty things, because I believe John Deere was one of the companies I gave the tip on last week. Okay, so now you would have gotten this on Monday, which was the 12th. Okay, and John Deere. Where did John Deere go? That's not it. That's not it. That's not it. Oh, that's looking at the 16th. No wonder why. We're looking at today's the 13th. We're looking way down here. And I just saw John Deere somewhere. All right, well, anyway, let's take a look at John Deere. Here's what it looks like. This is a nice big gap up. I don't know why that is. Presidential election was way here at the 8th. All right, president gets elected and things shoots up. Gap's way up here. It goes sideways for a little bit. Had you gotten in yesterday at the open. Okay, so John Deere, it's a 20-cent dividend. Is that correct? Let's take a quick look at John Deere again. There it is right there. Okay, 60-cent dividend. Okay, so it opened. Look at that, you would have been called out the very first day. That's cool. Okay, so it opened on Monday at 103.01. The high of the day was 103.65. So if you got in at the open, 103.01, and you had your target price as 103.62, and the high was 103.63, you would have been called out. So you would have gotten your profit in that one day. Now, one thing interesting about John Deere, which you may or may not have done this trade, but look at this. The seasonality for John Deere, right here, is where we are now, and it shows for the rest of the year. It should go up. And then the very last week, or the last couple of days, a little tiny drop off. But here's where we are now, the next 2 weeks, the 13th. So it should be going up for the next 2 weeks. Okay. Sideways a little bit, and tears up. Gotta love it. Okay, so that was John Deere. Today's the 13th. Okay, so next week, that's what we're looking at, and we don't have the week. The funny thing is with this company, it doesn't give you way out there. So the only thing I can do is right to there. But I'm not going to look at that. I'm going to go back to my chart. So that was John Deere. Oh, let me just cover that real quick. John Deere was one of the tips I gave last week. Okay, trade. DE. Now, if you remember, or not, from last Thursday, that we gave John Deere as a tip, you know. So we thought John Deere is going to go up, and everything pointed in that direction. All the numbers are getting ones across the board. The only thing we didn't like was this, but we wanted to overlook that because they have a 2.3% yield. 3.2 million shares are traded, and the chart looks pretty good. And we get the ones. Okay, so this is what you got on Monday. You done this trade. Take a look at, put DE in here, because I did this last Friday. If I want to show it to you again, it's just be relatively quick. There we go. And we want to go look at what the chart says. Now, the chart should give us something really good to look at, because John Deere is a good company. Everybody knows who they are. And 10 years, that's what we're looking at right there. Okay, so 10 years ago, John Deere was way down here, which is right around 50 bucks. Okay, it went up a little bit and dropped in 08. Everything dropped in 08, so we really can't hold it against them. But what we do like is at $50 10 years ago, and today it's $100. So you're doubling your money over the 10-year period. That's good because it gives us an idea of how we can forecast over the next 10 years. Now, just because that looks good, let's go here. Now, DE, John Deere, is, there we go. Oh, we get the ones across the board. Let's get rid of the 15 and just bring in the average. Okay, so if the dividend is here in 10 days and we're way out here, which was Monday, which is yesterday, on average, as you can see, 10 days prior to, then she moves up, coming into the dividend. And then what happens once you reach the EX date? It drops a little bit, then she goes up, and then she goes steadily up for the next 90 days. Okay, it doesn't go up hugely, but anyone can see from here to here is another way of getting a little bit more profit if you hold on to John Deere for a little bit. But we're not looking to hold on to it. We want to get 60 cents. We want to get out of there. Okay, so Let me show you what I showed you last week. We got here. We went to a vertical. And 103, let's bring this back to the regular chart. Let's bring it down a little bit. Okay, now we see it going up. So we think it's going to continue to go up, and it's at 101 at the moment. So if we look at the selling a credit spread for 100, 101, which would be right here, all right, we can get a 33-cent credit for the next 3 days. Now, what kind of return are we going to get on that? Okay, we would have to put up $670. See? Buy-in power effect. That means they're taking out $670 out of my account, and I'm making $300 off that. The maximum profit I can make is $330. Unfortunately, it's costing me $30 just to make this trade. I don't like that. But anyway, $300 profit from the $670 I'm putting up. That's a little bit less than a 50% trade for 3 days. This option expires on Friday. Do we think it's going to go there? We don't know. Okay, that's one. Let's look at another one. Let's look at a single. All right. Let's say we buy it first thing in the morning at 101.50. Okay. We could then buy it at 101. Let's get rid of this. Let's say we buy 1,000 shares. Okay, at 101.59. Now, we get filled tomorrow. We now own it at 101.59. We could sell this one right here, giving someone else the right to buy it from me at 102. Now remember, I bought it for 101.59. So the difference between 101.59 and 102 is 41 cents. Okay, so I'm adding another 41 cents on top of what I'm getting. So here we have a stock, John Deere. We know they're going to be paying the dividend at the end of this month. And we also know that based on the software that the stock has a tendency to move up coming into the dividend. So we have a bunch of different plays we can make. We can buy the stock, hold on to it, collect the dividend, and get rid of it because the software says it's going to go up after it pays its dividend. So we get the run-up coming into the dividend date. We collect the dividend, and we also can do a trailing stop and sell it afterwards and make a little bit more. Hey, it's 3 ways of making money. Like you can catch like a triple dividend, which is cool. Also, we have other plays to make, which I already showed you. Let's go back up to here. Click on the vertical. Now it's at 101, 100, 101. This move right here, which is doing the credit spread, I'm selling the 101s and I'm buying the 100s, which means if the stock drops below 100, I have to buy it at 101. I don't mind because I'm collecting 50% return on my money that I just invested. I'm getting a stock that I know is going to move up, and I can collect more on that. So let's go back to the single, and let's say we buy 1,000 shares, which would allow me to get 10 contracts, and then I could sell those, and I'm making 46 cents off that. Okay, so I'm getting a credit of 500. Right off the top, I'm getting a credit of 500. I would also be collecting difference between the 102 and the 159 I paid for, which is another 41 cents. So 41 cents multiplied by 1,000 shares is another 410 bucks. So I'm going to add my 410 bucks onto this 545. So you got 545 plus my 410, which is the difference between the 102 and the 149 when I'm paying for it. Okay, so add the 410. And that's going to give me a grand total of $955. Now, what is this trade costing me? Okay, this trade is costing me $19,611. See that number right there? Buying effect power at $19,611. Okay, divide that by 19,611, and my return for 3 days is 4.8%. Interesting thing about this is you're making 4.8% for 4 days, which is about 1 week. That's why I like weekly options. What does that mean? Okay, let's get out of there. Okay, so right now the stock is at 101.33. That was the last trade. Okay, the ask price is 101.59. So if I buy it at 101.59 and I sell someone the option to buy it from me at 102, I make the difference between that, and I also collect this premium right here. So I'm collecting, remember I showed you earlier, I'm collecting $955. Okay? Nice thing about this is we already know the stock goes up over the last 10 years coming into the dividend play. That's great. We also know that I'm buying it at 101.59. I am selling someone the right to buy it from me at 102. So I'm making the 56 here, and then the 41, which is the difference between this, between the 101.59 and the 102. It's another 41, brings me 955. To make the trades costing me a grand total of, I forget what it was, 14,000, 15,000, 19,611 right here. See, I'm making 955, and it's costing me 19,611. So I'm getting close to 5% for 1 week. Okay, so 5% for 1 week. If the stock stays where it is, then most likely I'm going to keep it. Nobody's going to buy it from me. Okay? If the stock goes up, if it goes up over to 102, which is right there, which is not much. Okay, if the stock ends this week 102 or higher, I get cashed out and make my 5%. And then last week I already got the 50% off the other trade. So you get 50% off the trade from Friday, and today or tomorrow morning I do this trade and get 3 days, Wednesday, Thursday, Friday. That's it. 5% for 3 days. That's pretty darn good if you think about it. And it's a relatively good trade. So what happens if I'm stuck with the stock? Okay, great. I'm stuck with the stock. I can do this exact same thing next week. Sell the 102 for it. It says right here it's going to be 105, but it's not going to be because of time decay. The time's going to keep on ticking away. So most likely I'll be able to sell it again for another 50 cents. And you keep selling it for 50 cents, 50 cents, 50 cents until it finally reaches the 102, so you can finally get rid of it for more than you paid for it. But the nice thing about it is they got a 60-cent dividend coming up in 2 weeks. Okay, do you see the beauty in it? It's 60-cent dividend coming up in 2 weeks. Okay, I'm buying it at 101.59. Okay, I can collect the 60-cent dividend, 56-cent premium here. If it hits the 102, I collect the difference of another 41. So I'm just getting money on top of money. This is great. Okay, so that was one of the tips I gave last week was John Deere. Now the other tip I gave was Comcast. So let's go and see Comcast, CMCSA. Okay, and let's go CMCSA here. Okay, that's what it looks like at the high of the year right about now. It's $70. The low of the year way down here at 53. Let's go to the software, see what the software is showing us. Let's crawl this up a little bit. CMCSA. Okay, the CMCSA is showing us not very much history, but Comcast has been around for a while. If we get in before the 10 days, it does nothing but go up, which I like that. Let's go over here. In this software number 2, CMCSA, and hit go. Okay, this is a little choppy. The only reason I would do Comcast is because it's a widely known company. The dividends are good. Well, actually, the dividend yield is not that good. It has great volume, looking for 27 cents, and it hits it whenever it was paying out. I don't know. I don't know if I do it or I wouldn't do it. Can't really tell you. Most likely not. But this was the tip I gave out last week, and I'm going to show you why in a minute. But right now, let's take a look at the 10-year chart. 10 years ago, we could have gotten Comcast at a grand total of right around 29 bucks, and now it's at 69. So that's a $40 increase. That's more than 100% increase over the 10 years. Okay, let's get rid of that. Now I'm going to show you why I suggested Comcast, and I actually did it myself. All right, Comcast, here we go. Now let's go back to the vertical. And this was Tuesday, and this was Monday, and that was Friday. Okay, so Friday, she opened up at 69.47, and the high of the day was 69.48. So what we did on Friday, we sold the spread. We sold the 69, 69 and a half. Now I forget what we got it for, but I know it was 105% return. So we got 105% return for Friday, and what happens on Monday? Lo and behold, we own 2,000 shares of Comcast at 69 and a half. So yesterday, it had an opening of 69.03 and a high of 69.28. So we're stuck with these and trying to figure out what to do. So what did I do yesterday morning? I went and I turned around and I sold someone the right to buy it from me at $69.50, which is the exact price I paid for it. So on Friday, I get 105% return for selling the options. And yesterday, I sell someone the right to buy it from me at the exact same price I paid for it, which is $69.50, and I'm gaining 9%. Okay, I don't remember exactly what it was. I probably can go in and take a look, but it did not. Wait a minute. I might be able to do this. Let's just wait a second. Come on, CMCSA. Here we go. View trades. All right. It doesn't say what I paid for them, but here they are right here. I got 20 contracts of the 69, 69 and a half. Well, that's for today. I did that one today. Or yesterday. No, did that one yesterday. Okay. It's already in the money, so no, it's not there. Okay, so Comcast, we know that the dividend is coming up in 2 weeks. We know that the stock usually goes up coming into the dividend play. And we already made 105% on the option. Now we're stuck with 2,000 shares of Comcast, which we know is going to go, well, we like to think that's going to go up. Let's see the dividend. Let's see the seasonality on this one. Okay, the seasonality for Comcast is, here we are right now, the end of the year, on December 13th. And what happens towards the end of the year? It shoots up. Not hugely, but you can see it goes from here to here, steady growth. And we don't need it to go anywhere. We needed it to go, where were we? Let's get back to where we were so I can show you where we are. Back to standard. Okay, yesterday she closed at, Open, high, low, close. It's 69. Okay, see the close is right there? Yesterday she closed at 69. So we only needed it to go up 50 cents. So what happened today? Today she opens up at 69.07. She hits a high of 70.23. So if we're just doing the dividend and we weren't going for the option, the dividend already would have been called out. But that's not what we were looking to do here. Here we wanted to get a little bit more money, so we're shooting for the 9% return, selling it for the exact same price we paid for it. So as long as Comcast stays at 69.50 or above, we'll be called out on Friday, and we'll walk away with a 9% return for the week. Okay? So for those who are getting in late, let's see what numbers we can shoot up for you right now. Okay, so she's at 69.98 at the moment. If you wanted to do this one, 69.5, 70, you get a nice return. But if you just want to collect free money, let's look at doing this, the 85.5, 68.5, 69. Let's see what kind of return you can get on that one. 400, that's a crappy return, but it's not bad. $50, and you have to put up 420. Eesh. $50, and you're putting up 420. Okay, so it's 11%, almost a 12% return. Okay, so you do 10 contracts at 12%. That's not bad. 12% return for 3 days. And you break even is 68.92. Okay, right now she's at 69.98. So 68.92 is going to be way down here. But for a stock that we have a good idea is going to go up and it's going to pay a dividend, it's almost like a no-brainer. And I like those trades because it makes me feel good doing those. Okay, those are the tips that we had last week. So, in short, we're kind of doing good with those last two that we just gave. So what do we have for you today? Let's get out of here. What do I have for you today? Let's bring this up. Yeah, you can do the John Deere. That's still a good one. Now, if you want to do, let's look at ADP. ADP, they do electronic checks. They do a payroll. So in 2 weeks, ADP is going to be paying out their dividend. 1.7 million shares traded, 2.3 yield, looking for an 86-cent dividend. Okay, the high was 149.06. They got a 1-year target of 106. Wait a minute, 1-year target of 150. It's not a huge move, but it is one. So let's take a look at ADP. I'm going to put ADP into the seasonality chart and take a look at that. All right, let's get rid of 2016. Just stay with the average. All right, this one, ADP is not very glamorous because payroll is not a glamorous type of a business, or not very lucrative. So if we get in 10 days prior, which is yesterday or today, or even tomorrow, that's good. We're looking at basically going sideways, going into the dividend. So we're not a lot of up coming into it. You collect your dividend check right about here, and then she drops down a little bit, then she shoots up and goes sideways with a slight upward trend. Okay, it's a nice number, an average of 2 days in order to get in, get out, and collect your money. 57 cents. Let's see what the other charts look like. Looking at ADP. Okay, so the high is right about now. The lows, high is way out here, 98.62. The lows way over here, 77.17. Let's see what this seasonality chart looks like. All right, it shows them going up for the rest of the year, and that's not right. The seasonality stops right here. Where's it going? That's interesting. All right, let's go back. All right, so we have 2 red days today. Is it going to continue to go sideways coming up into the dividend? Because we know it just basically goes sideways. So is ADP going to be a good one or not? I don't know. ADP shows you 2 days to hit the dividend. And we're at 98.40. Yeah, that's a big spread, $2.50 spread. I don't think I'd do that one. I'd probably do this one, but it may not be worthwhile. As long as she stays where she is. Okay, 27% credit. That's a good credit. I like that. Well, let's see what she's going to pay. That's like 10%. You have to put up $2,200, and they're only paying $240. So that's just like 11% return for 3 days. It's not bad. A little bit more conservative. Let's see if they have one more conservative. Nah, that's not enough. That's the only one right there. Yeah. All right, so this the 95-97 spread going to give us a 10% return. Let's see what a covered call would give us. All right, she bought at 98. Best thing we can do is sell the 97.5. 97.5. That ain't even worth it. Because you add, see, if you sell it at 135, you add the 130, if you sell it at 115, you add the 115 to the 97.5, then you're looking at 98.65, which is less than what you're paying for it. So that's not a good deal. All right, we're going to skip on ADP because it doesn't look good. Don't like the numbers. Well, at least for covered call, it don't look good. Whew. All right, well, these are the ones for just straight out dividend capturing. LOAN, CIGI, NHI, PG. Okay, anyway, I'm going to show you all these guys. Got people paying for this. I don't want to give it away for free. Okay, so ADP, we already showed all those. Another good one to look at. I think that should be good for now. You guys had a good idea of what to do, how to use the software. You know, I haven't been able to figure out how to get to your questions yet. So if you send the questions in, I'll be able to answer them a lot easier. So that's what we're looking at. Those are the tips I've given you. This is James from the 10-Minute Trader. And that's the software. And I'm going to sign out for now. You guys have a great day, and I'll see you on Thursday. Give us a better idea of what those stocks, the two